Hi, everybody. Scott Riley, the Market Update Desk. It's July 29th, and the wave of data for jobs and economic reports starts to flow in today. Let's break down what we're seeing started for today and the look ahead for the week. So, the Fed tomorrow starts their 2-day meeting. Now, they're not expected at all to cut rates, but some very interesting things. It may be the first time that more than one person dissents in a vote in 5 years. In fact, if two governors dissent, which is very possible with Waller and even Michelle Bowman calling for rate cuts, it'd be the first time two governors dissented in the Fed uh, vote in 32 years. That's a pretty strong statement. Now, in all honesty, this is a healthy thing because it would bring much needed debate and more conversation to the Fed. And that's a very positive thing. Just because there's a dissent doesn't mean that's a bad thing. Now, we got the JOLTS report today, the job opening and labor turnover survey. That's the start of the jobs data. Now, this showed that the June report, the job openings fell by 275,000 to 7.437 million. That's 113,000 fewer job openings than estimated. The hiring rate fell a tenth from 3.4 to 3.3%. It's the second lowest level since 2013 when you remove COVID, that is. Now, the quits rate remained at 2%, but there was a previous report that revised it lower from 2.1 to 2%. So there really was a tenth, but with revisions, it made it flat. This is continually showing that the labor market is weaker, as the quit rates means that people are less confident about getting a new job, and there's less concern from employers about poaching existing employees from other companies. And it aligns with the continuing claims data that we've been seeing that's pushing continuing unemployment claims closer and closer to 2 million. Now, the workhorse of job openings and job creations, leisure and hospitality, those job openings fell by 264,000. Now, it's going to be real interesting how that flows into the all important but much maligned and discussed and not believed BLS jobs report. Because leisure and hospitality continually is the workhorse there too of job creations. But if we're losing job openings, how are we going to have more job creations in that category? So we'll see if those two things align. Consumer confidence, that was in today's reports also. Overall consumer confidence decreased 2 points from 97.2 to 95.2 due to the expectations of continuing concern on the economy. Now, the expectations of consumer confidence also, that actually stayed at 74.4, but that's still below what a healthy line of 80 is. On the labor market, consumers feel that current job availability weakened for the seventh consecutive month, reaching the lowest level since March 21. About 19%, or 1 in 5 consumers, indicated the jobs are harder to get in July than the previous month. That's up 14.5%. Now, on the technical side, we're seeing some interesting things happen. We're clawing back a lot of what we gave up about 2 weeks ago. Mortgage bonds are higher this morning. They're trying to break above resistance of the 25-day moving average and the Fibonacci level at 101.39. Now, if we can break through these levels, we've got a lot of room to the upside. What does that mean? In short, it means potentially better interest rates. We've been on this line before, though, and every time we go up, we get bounced back down. Also, in the 10-year treasury, they're holding again at the 50-day moving average, breaking. Now, we did break beneath the 200-day moving average, and we're testing the 4.33 level. In fact, we're sitting at 4.34 right now. If we can close or break below that, the next line to fall would be 4.31. Those would be, again, good things for mortgage rates. But we've hit this level about 4 times in the last 2.5 months. Every time we start to get the momentum to hit that and go beneath it, we get bounced back up, usually from some economic report, whether it be the jobs report or CPI or PCE. Um, Now, we did also get some news today. Um, Commerce Secretary Lutnick came out and said more international trade deals are on the cusp and they should be done by Friday, except China, which will take, quote, longer. So we'll see what happens there. They're indicating there's not going to be another pause or extension of these dates, except possibly, I'm thinking maybe China could be pushed a little bit because it's much more complex. Now, when we look at the markets for who the next Fed chair could be, we're getting into about a three-horse race right now. Leading the pack is former Governor Warsh, followed by current Secretary of Treasury Dissent, and then also we have a third in there, which is Mr. Hassett. So we have three that are leading the way. The one that is leading by 1% in the betting markets right now is former Fed Governor Warsh. So we're kind of keeping a close eye on that, especially with all the verbal barbs that are going on. It's kind of interesting to watch this dynamic behind the scenes. So more to come this week, obviously, with all the data coming out. Scott Riley, the market update desk. Actually, we had another borrower submit an offer last night. We were talking to both agents at about 10:30 last night. We are always working helping our buyers stand out compared to other offers. Give us a call, 616-293-2189. The Market Update Desk, of course, is your original singular market news source for West Michigan. Enjoy the day.